Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. The unemployment rate remains low at 3.7%, but inflation is still too high, ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal.
So as the Federal Reserve decides to pause on the effective federal funds rate 5 months in a row, and inflation still sitting above 3% for the past 7 months, the next FOMC meeting is in 48 days and 64% are expecting them to keep rates paused again. Only 36% are expecting a rate cut. He also said that they're going to keep a close eye on the unemployment rate, and if we see unemployment spike, then that could lead them to cut rates a lot sooner than everyone expects. So in this video, I'm going to share with you guys why I am more bullish than ever before in the macro for crypto. And I do have a warning for you guys in the short term, but when we talk about the dtcc with XRP, XLM, and specifically Chainlink on what is taking place right now, this is going to absolutely blow your guys' mind. So comment 777 if you're feeling blessed, comment 777 if you're feeling bullish, and let's run it. All right, bull runners, welcome back to the channel. So let's dive in first and foremost talking about Bitcoin and then the total altcoin market cap, and then XRP, XLM, and the rest of the market as well too on what's most likely to happen next. Because with this FOMC meeting, the markets are seeing a sell-off right now. Bitcoin, the stock market, altcoin market, everything's seeing a sell-off. And if you guys watched my video yesterday, I talked about this bearish divergence where we see higher highs on the price chart forming all the way to the ETF approval, the spot Bitcoin ETF approval, but yet we see lower highs on the RSI signaling a trend reversal. Now we can see this upward trending support right here. I talked about a break of support, a back test, and a continuation to the downside is still in the books as we get rejected from this upward trending support. A lot of people are expecting the price to come all the way upwards of 46, 47, 48K. Some people were even longing the markets right here, expecting it to go to a new all-time high. So far, we're spot on. Now, I don't like being right when I'm bearish because we just want the markets to keep going up, right? But we do have to analyze the past. And if you guys haven't watched my video yesterday, you want to check that out on the channel after this one, because this is going to explain what is most likely to happen next. As we're getting rejected right here, and there's beeping going on, I got some water ready for me right now to drink. And so this thing is packed with hydrogen. So if you guys have ever had hydrogen water, lots of benefits for your blood and all that good stuff. And so we'll be getting to that in the future with the fitness sector, the brand, as we expand in other areas. But right now, the focus is in the finance market, in crypto, guys. We might be pivoting in 2026 when we're in the next bear market, but we'll still keep creating crypto content for you guys. This is the most exciting bull run of all time. So what I would expect to happen is a back test of this previous range right here, like I've been talking about in several videos. So there's only so much content I can make every single day when we're on the daily chart right here before we need to see how this plays out. But a continuation to the downside would play out perfectly in line with what's happened in past cycles, because this is not that big of a dip right now. I mean, we're only at 20%. Most of the bull markets, we see 30 to 40% corrections. And so a 35% correction would bring us down to $31,000. A 40% correction would bring us down to $29,000. Now into Bitcoin's halving, I think that's possible. We might not go that low. We might stop out somewhere down here, at like 36,000 and then reverse from here. But ultimately, my thesis is still bearish into Bitcoin's halving. But the reason why I'm more bullish than ever before is because of what I'm going to share with you in this video. Now, what we do need to look at is the total 3, which is the entire altcoin market cap, excluding Bitcoin and Ethereum. And we can also see a bearish divergence where you can see lower highs being formed on the relative strength index. And we also see a head and shoulders pattern right here, where you can see the left shoulder on the 24th of January. We see the head right here for the higher high while a bearish divergence was taking place. We break down, we rally back up, we form a right shoulder, and the neckline is at roughly $470 billion. Now, what just happened recently, I mean, while I was prepping this video, we saw us break this neckline to the downside. If we come up, we could back test it, and I would expect us to continue to the downside closer to $460 billion. Now, the real question is if Bitcoin is bearish into Bitcoin's halving, then the altcoin market and the total three would most likely be bearish into Bitcoin's halving as well too, for us to come back down and potentially test, $455 billion. We can see all the way down here to $440 billion. But eventually the RSI will reverse as we are, down here closer to 30. I do expect this to take a period of time. We're not just going to crash overnight. We do see periods where there's recovery rallies over the course of a few days to a week, followed by massive red candles to the downside over the course of 24 to 48 hours. Usually it happens when you're sleeping because they like to liquidate people while you're taking a little nap. They have their algorithms running, their artificial intelligence software. But when in doubt, zoom out on the daily. If I zoom out right here, where I would expect the markets to go if Bitcoin comes back down to back test the previous range of resistance as support, I would expect the altcoin market to come anywhere within this range right here, anywhere from $400 billion to $440 billion, and then reverse from out of here. I would expect it to liquidate a lot of people down here, and for us to do something like this and then work our way out of here, going into the biggest bull run, the most liquidity of all time. And so the best possible entry points back into the altcoin market, if you guys are sitting on the sideline, again, no financial advice, don't buy, don't sell anything. Consult your financial advisor. But for me personally, when I will be buying, the majority of altcoins will be around $400 to $420 billion if we see a dip down here. Now, if we don't dip down this low and we just break on out of here and we start retesting these previous ranges of, resistance right here in the middle of this range back in February of 2022 to like April and May before we fell off a shelf, and also support all the way back here from 8th of September, I believe this is the next stop, for the hope stage right up here before we consolidate and then work our way to the all-time high. I believe upwards of $700 to $800 billion, somewhere around here, around this range, is the next breakout phase. So if we don't dip this low and we just go right to there, I'll be fine because I'm still holding some crypto. I'm not, I haven't liquidated my whole portfolio, but taking profits is always a smart move on the way up. If you're overly invested, right? You don't want to, you can hold the whole entire bull run. If you're not overly invested, you'll still make money. You don't need to worry about it, because it's a lot better to hold long term than it is to try and time the entry and exit points. But if you do want to time entry and exit points, here's what to look for. We need to look for periods of overbought and oversold based on key indicators. So looking at XRP to the Tether price chart on Binance on the daily, we can see two upward trending supports right here. We just barely broke below this upward trending support recently, and the next stop is this macro upward trending support that XRP has bounced off of several times since the 17th of June of 2022. Now I've circled key points of support on the chart right here, and also key points where the RSI has dipped down below 30. And the last time was on the 12th of September when XRP bounced off of this upward trending support of about 45 cents. The time before then, XRP wicked all the way down to 42 cents. The time before then, we were almost to 30 on the RSI. We were right around here in the 8th of May. XRP was about 40 cents. The time before then, when we dipped into this red horizontal box of support right here, it shows that the momentum is drastically in favor of the bears, but also we are oversold. So that is a good time to back up the truck all the way to the bank, because usually when we dip down below 30, price reverses out of here and we see the bulls step back in. The time before then was the 9th of November. As you guys can see, XRP was at 31 cents. The time before then was the 17th of June. XRP was at 28 cents. The time before then was around May, 9th of May, XRP was at 33 cents. So if you pause this video right now and you look at this chart and you screenshot this, you guys will see we are in a falling wedge formation right now for XRP. And so if we see XRP go within this yellow circle right here, I would expect us to break out of here and come back up closer to 50 on the RSI, as XRP would bounce potentially off of this upward trending support about 43, 44 cents and do something like this is what I would expect. And so me personally, I'm not telling you what to do. If XRP goes down to 43 to 44 cents and we see Bitcoin continue to the downside, I'm going to be buying more XRP than ever before. Now, looking at XLM's price chart right here, you guys can see the resistance to the upside is where this wick was on the 1st of July at about 19, almost 20 cents. The support is all the way down here to 7 cents to 8 cents. And so if XLM comes down within this box of support right here within this zone, that's going to be the best possible entry point, in my opinion, to accumulate XLM, because I believe we would blast out of here going towards tail end of 2024 after Bitcoin's halving. And so if we see a macro sell-off in the markets, that will be good news, because on the RSI, we just broke above the RSI-based moving average on the 1st of May. And also we saw a bullish cross right here where the MACD crossed above the signal line on the 1st of July after the bottom of the market was in. If we look all the way back until the 1st of December, we saw a bearish cross after the top was in. This was like 200 days after the top was in, and the RSI was also upwards of 74. So the fact that we've seen, this bullish cross well below the zero line is a stronger signal of a price reversal to the upside. So if there is one final stop for XLM between 7 cents and 9 cents, I'll be backing up the truck for XLM. And if we see a break above this resistance of 18 to 20 cents and hold it as support, the next move for XLM is upwards of 34 cents to 42 cents, and then the all-time high after that, which is like 83 cents. So how far away are we from the all-time high? We're about 600%, or a 6x for XLM. And everyone is complaining right now about XRP, guys. They're complaining about XLM. They're complaining that, when Bitcoin rallies, XRP sees a sell-off. The people that are complaining, this is their first bull run, or they got in the markets like in 2020. So they're very, very new. If you've been in the market since 2016, 2015, you guys understand the emotions right now, because XRP was suppressed while Bitcoin rallied for like 800 days. XRP saw a sell-off of 80 to 95%, and then XRP blasted on out there and grew over a 500x. And so this is how the rich get richer. They buy the dips when the markets are oversold. Retail sells the dips because they don't learn the charts, and they get wrecked because they buy or sell based on emotion. So it's very, very simple. You buy low when markets are oversold. You sell high when markets are overbought. So if we look at the RSI, where are we right now on the RSI? Well, we're down here. We're at 31. So anything below 30 is drastically oversold. Anything above 70 is drastically overbought. So as you can see right here on the 6th of November, we were at 88 on the RSI for XRP. We were upwards of 73 cents. This was a good time to sell. The time before then, we were at 87 on the 13th of July, 2023. XRP rallied after the lawsuit to 93 cents. This was a good time to sell. The time before then, we were at about 71 on the RSI on the 1st of June, 2023. XRP was upwards of 54 cents. This was a good time to sell. Now, in the macro, it's a good time to hold, but if you're looking to take any profits and day trade these markets, it's very, very simple. On the daily chart, you can see when we are above 70, historically, if we look at the 26th of March, 2023, even back here, XRP was upwards of 55 cents, a good time to sell. If we look back here on the 24th of September, XRP was upwards of 55 cents after rallying from 30 cents. This was a good time to sell. So this is just back to back to back to back to back proof on when it's a good time to buy and when it's a good time to sell. Very simple. We dumb this down to make this really simple. We give you guys the blueprint to help you make millions. Ignore the noise in the middle. Ignore the people that are saying like, this is a scam project. Listen, guys, we don't work for Ripple. We don't get paid by Ripple. We make these videos because I personally believe in XRP. I personally hold XRP. That doesn't mean you should, but of course I'm going to make videos about what I believe in and what I think is going to do well. Now, also, I am going to let you guys know when I think something is overbought and when it's going to go down. I'm not just going to hype you up to buy in when a project is above 70, and I'm not going to hype you out and tell you to get out when we are below 30 on the RSI. So the fact that we're at 31 right now on the RSI is making me more bullish than ever before, because I observe what the masses are doing and I do the opposite. So if I refresh this page, let's just put some people on blast here and let's see what people are saying in the comments, because this is absolutely hilarious. Yeah, they buy millions when it goes low and sell millions when it goes up 10%. Awesomeness. So some people are positive, 539. No, we'll wait a price at 35 cents, full stop. Wish I could buy some. I'm strapped, dead broke, fully invested in crypto and houses, but the payoff will be 2 years. Hey, you know what, man? You got to do what you got to do. Everything can turn around in 1 year. Nobody buying XRP for it not to go up in price. Rather take risk on other coins. So that's what the masses are doing. They're taking risk on other coins. And hey, rightfully so. I'm diversified. I'm not just holding XRP. So people think that I only hold XRP. That's not the truth at all. XRP is one of my largest holdings, but that's for the long term. So I do trade other coins as well too that we've talked about on this channel. And so this person said no one. Yeah, very small percentage of people are saying this. The reason why is because 99% are like a herd. They move like sheep. They move like cattle. They move together. But those that move opposite of that are the ones that buy low, they sell high. This person said, I'm not going to buy. I'm looking to get the F out. Okay, good. Get out right now. Yeah, get out. Below 30 on the RSI, right before we reverse back up. The worst time to get out. And then the markets start rallying. So people like this guy right here. So William Tell 7682, if that's even a real account right there. People like him, they sell when XRP goes down here, and then XRP does stuff like this, and it pops back up here, and then he's buying back in upwards of 70, 80 cents up here. And then XRP sees a sell-off back down again, and then he's selling again right here, and then XRP breaks out again. This has been happening, guys, since the 2nd of June. I mean, this has been happening forever in trading. Just observe the RSI, very simple. And then you could look at the MACD, you could look at the stochastic RSI, other indicators, but it's very interesting to see some of these comments. So let's get into the other news, because what's happening here? SE Currency, tokenizing. This is Chad Steingraber posted this saying SE Currency is a technology product company that delivers a complete suite of security and compliance tools to issuers, broker-dealers, and alternative trading system operators to enable the issuance, maintenance, and secondary trading of tokenized securities. Now, SE Currency's protocol can be utilized on the Ethereum, Stellar, Ripple, EOS, and other distributed ledgers, as well as on legacy systems, allowing for seamless on-chain and off-chain movement of tokens. So when we look right here, SE Currency is now DTCC Digital Assets. They just posted this. The managing director, global head of DTCC Digital Assets, says, as we join forces with DTCC, we are excited to bring together DTCC's infrastructure capabilities with SE Currency's technology to embrace a future where the digitization of capital markets is at the forefront of innovation. These capabilities will allow DTCC to partner with the industry to build a resilient and scalable infrastructure critical to the mass adoption of digital assets. Together, we will unlock opportunities to reimagine compliance, liquidity, yada, 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 trading real-world assets on the blockchain. See, that is the key. Real-world assets on the blockchain. Even Larry Fink said it himself.
We believe the next step going forward will be the tokenization of financial assets. And that means every stock, every bond will have its own, basically, QSIP. It'll be on one general ledger. Every investor, you and I, will have our own number, our own identification. We could rid ourselves of all issues around illicit activities around bonds and stocks and digital by having a tokenization. But the most importantly thing, we can customize strategies through tokenization that fits every individual. We would have instantaneous settlement. Think about all the costs of settling bonds and stocks. But if you had a tokenization, everything would be immediate because it's just a line item. And so we believe this is a technological transformation for financial assets. I believe if you want to talk about voting and voting choice and all the things, if we know every moment who is the owner of that stock and it's now time to vote, every individual who has ownership is identified and they can vote their own shares.
Is this the end of mutual funds?
I think, well, a lot of people, it's a wrapper. It's not the end of it, but I would say the dominant form of bringing products going forward will be in the form of ETFs.
So on dtcc.com, they have 50 years of experience. It's the premier post-trade market infrastructure for the global financial services industry. In 2022, DTCC subsidiaries processed securities transactions valued at $2.5 quadrillion, guys. Quadrillion. We're talking above trillions. And its depository subsidiary provided custody and asset services for securities issued from over 150 countries and territories valued at over $72 trillion. So a 2.5 quadrillion tsunami is about to hit the market, specifically for XRP, XLM, Chainlink, and other assets in the crypto space. Now, with less than 4 months until the US moves to a T+1 settlement cycle, well, that's very interesting how tokenization coming in hot this year around the same time that Bitcoin is having. The Ripple lawsuit is going to be over, and you can see companies right here like Chainlink making these posts. This post was just a day or two ago. They said the collaboration between dtcc and Chainlink opens the door to a multitude of use cases that could redefine how the financial industry operates. Now, looking right here on dtcc.com as well too, this was officially posted from them. They said bringing capital markets on chain with dtcc and Chainlink. And you guys can see this post right here. You can see how they're going to operate and be integrated within Swift. This is massive. How can you not be bullish right now when you see this? In the short term, I'm going to be showing you guys Chainlink's chart as well too. But look at this, and we'll play this video, but let's jump into the chart and let's play this clip right here. Nobody's watching this stuff right now. Look at this, guys. This was posted 1 year ago. They've been prepping this for the past not only year, but several years. This only has 5,000 views. And so I honestly think a video like this should have more views than my stupid videos that I make. You know, these videos that I make can sometimes get like 15, 20,000 views. So Chainlink, if you guys need help with your marketing, reach out. We'll help you with some stuff and we'll get your subscriber base up. So Chainlink has 64,000 subscribers, 5,000 views, 146 likes. But this video is very, very powerful because when we look at the chart right here, we see the Wyckoff accumulation. What phase are we in right now? Well, we are about to go into phase Z. So phase A, we can see a massive sell-off. This is the bear market. We find a low. You know, Chainlink comes all the way down here to $5.30, and then we consolidate for an extended period of time, you know, in phase B. Phase B, you know, is like what, 300 plus days. Even until we broke out, it was like over 500 days. I talked about Chainlink in a previous video on how we were going to see a breakout. So I was buying Chainlink, guys, all the way around this range from $7 to $8. So I accumulate some at $6 right here. I also accumulated some at like $7, and then I accumulated right before this breakout right here because Chainlink was due for a breakout. So XRP is due for a breakout as well too. I think XLM could bobble around for a little bit, you know, but eventually XLM follows XRP, so I think they'll break out together. But right here, phase B was a long period of time where we see us rally back up. We form a resistance right here, and then we just bobble around and consolidate. We find another low for point number 2, and then we spring out of this low and we back test. We have to come back down to back test these key support lines and also resistance lines to get rejected from here several times. But once we break through these resistance lines, we go into this markup phase for phase D. Now, if Bitcoin sees a sell-off that's deeper than just a 20% correction, and we see like 30, 40% correction for Bitcoin, well, Chainlink might bleed out. We might see Chainlink come down here really quick. We could see it happen to $9. If Chainlink goes down to $9, guys, I'm going to be buying more Chainlink than virtually anything, right? Chainlink would be one of my most bullish holdings, along with XRP, ICP, XLM, and then Algorand, HBAR, several others, XDC, and a few others that I'll talk about in other videos. But I don't even think Chainlink might come down that low. It might just hang out here. We might see one final dip back down to maybe $12, maybe $11, and then we work our way out of here for phase E to go to the hope stage of point number 4. So if you guys want to screenshot this, you can, or you can go onto the community section on YouTube and you just click Bull Runners right here. You can click community and you can scroll down and there'll be a post on here. I'll post it up after this video. You guys can check it out, and then you can save the image and post it on Twitter, share this video with a friend, and get this blasted out there because I think Chainlink is about ready to have one of the biggest breakouts we've ever seen. And as you guys can see back here, you know, we could see the same thing happen for Wyckoff accumulation, where once we saw this breakout phase right here, we consolidated, we saw one final dip back down, then we rallied on out of here and we formed a new high for Chainlink as we broke above the previous high in January of 2018. So if I were to trace up Chainlink's chart right here and I were to draw this out to see what this could potentially look like, obviously it's going to be different based on this market cycle right here because these consolidation periods are different. But if we expand this out for Chainlink, it would look something like this, right? Where this consolidation period just leads us into a new breakout. We kind of hover around these previous ranges right here as resistance, right around the middle. We tend to go up towards the middle of this complacency stage right here for each of these projects. And then we either consolidate at it and go higher or get rejected from that to come back down to back test the previous breakout range before we work even higher during a bull market. And so where I would expect Chainlink's next stop to be is right around the middle of this range, right around 25 bucks. But then I don't think it's going to last long for there, because once we start breaking out, we're really going to start moving towards the tail end of 2024. I just think it's going to take longer than a lot of people are expecting, and we might see a much deeper correction like this on the chart, where Chainlink comes back down to like 10 bucks, potentially $9, and then has to work out of here after Bitcoin's halving. And so that's what I would expect for Chainlink. But ignore the right-hand side of this chart, because I just think Chainlink's going to go absolutely parabolic once real-world tokenization of assets starts to come into play. So I'm done rambling. I'm done talking, guys. You know, as you can clearly see, Chainlink bullish, XLM bullish, XRP bullish. Listen to this.
You know, just to set the stage, I'm very happy to announce that we are working on an initial proof of concept together with Swift on the use of CCIP. In the capital markets to enable communications and movement of tokens between, you know, a number of different institutions in a way that'll accelerate the adoption of DLT blockchains and benefit various institutions all over the capital markets. In that regard, I think we'll just start discussing cross-chain, and I'd be thrilled to hear Jonathan's views on the importance of cross-chain and how communication between chains and institutions in a multi-chain world could look and work.
Yeah, so thank you, Sergey, and thank you for the invite. Let me start maybe because I know, you know, not everybody is aware about Swift, but I will try to explain it very quickly. So Swift is a cooperative, is an international cooperative. We run perhaps the biggest network in financial services today for capital markets, for payments, for FX, for trade. We are headquartered in Belgium, although we have sort of operations everywhere. And we have around 11,000 banks that are connected to Swift today. They exchange financial information in the most secure, reliable, and scalable way. All right, so that's one, just to frame it that. The second piece is that the POC that we're doing, it's the end of a long story, right? I think 5 or 7 years ago was the first time Swift and Chainlink started working together. You were actually one of the first startups that we bet on. You won the startup challenge that we used to have a long time ago. And then even before blockchain was something that financial services had in their minds, I don't think at the time nobody was doing anything on blockchain, on financial services. Swift and Chainlink worked together on the first POC that we did on bond issuance and redemption. It was quite successful. And that was maybe the first steps of this sort of love story between Swift and Chainlink, which continues today. Now, why we want to continue to work together? I think there's two factors that I want to explain. So the first factor is there is undeniable interest from institutional investors into digital assets, whether these are stable coins, CBDCs, or anything that you can tokenize on capital market space. So that could be equities, bonds, or anything else. So those institutional investors, they want to have access to these assets at the same time that they have access to traditional assets. And that means that a asset manager, for example, wants to use the same custodian they use today, and those custodians probably wants to use the same sub-custodians to settle at the same infrastructures that they do today. And that, in theory, means that they want to use a network that can connect to all of these capabilities, and that's where Swift comes into play. So that's the first factor. You have institutional investors saying, hey, Swift, we want you to be the network to connect to that. Now, in reality, connecting to this network for digital asset doesn't mean connecting to new, same infrastructures. It means that you have to bridge the gap between these infrastructures that have been there for ages and all of these new blockchains that are going to provide these services, whether it's issuance, clearing, trading, settlement of tokenized assets. And there are going to be many of them. There's already a few of them. Some of them are private, some of them are Ethereum-based, some of them are in anything that you can, any fabric that you can imagine, right? So Swift doesn't always have the potential to go and try to connect to all of them, right? Because if we bet on 10 this year and those 10 disappear, then we are losing investment in that. And it's the same for the banks. So this is where CCIP comes into place, right? So it's the perfect example of if you have this interoperability network and you have Swift that is using this interoperability network, we connect to 11,000 banks. You connect today to 15 Chainlinks, to 15 blockchains, but you can connect to way more. That's the bet that we're putting on you guys, and we're trying to encourage you to do more. Then you have these two infrastructures that are secure, that are reliable, that are scalable, that can actually work so that you can buy an asset whatever you want and you can transact it in whatever country and serve institutions such as Bank of New York Mellon or dtcc to actually do that cross-border. Does that make sense?
Yeah, thank you for that thoughtful explanation. I think that's right. I think people don't fully understand that Swift has the largest private key infrastructure in the whole banking industry. There is no reason to get rid of that private key infrastructure that already securely signs transactions to move around trillions of dollars in value. That's the existing integration that's extremely important around Swift, together with its messaging and routing and all the standards that it creates. All of those standards can simply have an addition made to them that says blockchain stuff. And then blockchain stuff needs to go somewhere. And instead of being very specific and going to hundreds of different chains and having all the complexity of going to hundreds of chains baked in, you can just have blockchain stuff go to a global standard like CCIP that can distribute that to hundreds of these chains efficiently. So just like we don't want to build private key infrastructure for the 11,000 banks of the world, because that's already done, Swift doesn't necessarily want to build an integration with every single chain on the planet because that's a body of work that we're focused on. So in that sense, I think it's a great collaboration and partnership, and it has been great working with them. Jonathan is right that it's been a long road together, working through a lot of things that we haven't always been able to be super public about, but this proof of concept is something we're going to be talking about more and including more and more folks from the banking, capital markets, and institutional side of financial markets to make a big collaboration around. So thank you, Jonathan and Swift, for working with us. I really appreciate it.
Thanks.
I also missed a step when I introduced Jonathan that I didn't give him a chance to fully explain what Swift was. So I'm just going to correct that with Stephen and Victor. Stephen, please tell us about the DTCC and the immensely important role it plays in the global financial system. And then if you could share your views on how cross-chain and a multi-chain world would evolve from your point of view.
Sure, thanks, and great to be here. So Stephen Prosperi, I work at dtcc, which is a post-trade market infrastructure provider. Our core business is providing clearance and settlement services for US securities markets and post some pretty big numbers. I think last year we processed $2.4 quadrillion worth of securities. We often get asked if that's a real number, and it is in fact a real number. And it represents basically all broker-to-broker trades of equities, corporate debt, treasuries in the US markets. So naturally, we're very focused on blockchain and the opportunities it can present in the kind of industry where we sit in the industry. And kind of getting back to the question, cross-chain interoperability. We think it's very important from day one of our exploration in this space, about 6 or so years now. We've kind of felt it important that there won't be one blockchain to rule them all. There will be multiple out there. The currencies will live across different chains, and other assets of value represented through tokens will live across different chains. So very similar to the role that we play in traditional markets of bringing all of those together, and similar to Swift in some ways in that nature, being connected to all the banks and broker dealers to provide services, whether it's clearing services, settlement services, a lot of those same aspects, they'll transform, they'll look a little bit different, but fundamentally are very similar, I think, in a digital asset world. So in most of the initiatives that we take on, we look at how can this plug into multiple blockchains, and how can things coming down the pike like CCIP be used to help us kind of maintain that view, and again, to not build something that's already built, and to not have to stand up infrastructure to support 100 blockchains, if we can support one piece that can then plug into those 100 blockchains today, maybe 200 blockchains tomorrow.
Great, makes sense. I think that's just the common sentiment that I'm seeing, is that the complexity of integrating with chains and the rapid rate at which they're changing, they're releasing new versions, one chain disappears, another chain reappears. I mean, it's really not a problem that I think larger institutions need to solve. I think it's a problem that crypto-focused infrastructure like Chainlink should be focused on solving, and it's a problem that we're eagerly taking on and making sure that we have good solutions so that the capital markets can interact with blockchains efficiently, and more value can get on blockchains and become cryptographically guaranteed and highly reliable. So I think that's the goal that we all have, whether we work in the capital markets or in the public blockchain world. I think at the end of the day, we just want a more reliable, more secure global financial system. So Victor, I would really love to hear your views, and excited to hear about Bank of New York Mellon as well, and your views on cross-chain and what a multi-chain world looks like from your point of view.
Yeah, it's really great to be here. A lot of energy in the room, and so thanks for the invite. It's good to contribute. So BNY Mellon, Bank of New York Mellon, is founded in 1784 by Alexander Hamilton, so it's the first treasurer of the United States. So anyone seen Hamilton at Broadway, they're talking about the founder of our company. First stock traded on the stock exchange, first loan to the US government. So a lot of history, and that's very much embedded in our culture and our company, and we continue to stay relevant because we innovate and want to continue to stay engaged and grow, right, and innovate. We service 20% of the world's investable assets, so that's twice the US GDP in terms of custody. We clear and settle 10 trillion a day in US government securities or treasury securities, 2 trillion in payments, and we have wealth management and a strong distribution franchise in Pershing, which is it's essentially servicing broker-dealers and registered investment advisors. Now, where I sit, I'm the head of the enterprise tokenization in the bank, and so I have a view of what's going on across all different lines of business. And I see sort of this interoperability, play happening, not only connecting banks and others to each other, because essentially, I think what historically financial institutions haven't done well is connect, right? And so what's happened is we all have sort of our own like islands, and we try to operate the best way that we can, but there's always some sort of fear or nervousness around what happens if I connect more broadly into the market, what happens to my market share, what happens to my business. It's a complicated question. And we see sort of blockchains and Chainlink and others not only connecting infrastructure to each other, market infrastructure like banks, like DTCC or SWIFT, but even within banks, right? Because you have multiple systems, you have essentially multiple lines of business, and they've kind of grown up independent of each other. And so there's a lot of integration that needs to happen within banks. And so BNY Mellon is very much focused on building a centralized digital asset platform, connecting our individual lines of business and the different quote unquote rails we have, but also interested in connecting more broadly to the likes of DTCC, SWIFT, and perhaps one day Chainlink.
Great, thank you. I think you folks have a real level of insight about how tokenization is being approached in capital markets, because you're on the forefront of dealing with people that want to do that at some level of scale, rather than at the pilot or proof of concept size. So I think it'd be interesting to hear how each of you is seeing tokenization as a dynamic take hold in the capital markets. What are you seeing with people adopting tokenization? What are you seeing with tokenization becoming the way that capital markets want to interact? Jonathan, I'll let you start. What are your views on tokenization in the capital markets?
Well, it's definitely here. It is not going to go away. I mean, we have adapted all of our messaging standards so that we can make sure that we can cater for the information that is needed for tokenized assets. There's different granularity on the fractionalization of these assets. There's different ways to identify these assets. the fact that they are not holding safekeeping accounts, but they are holding wallets. So there's a whole implementation that needs to be done in financial messaging standards for this to happen, and this is something that is already live. So that already means that if a full network is actually changing the languages to make sure that we can cater for these assets, it's not going to go away. We don't invest a dime unless we know it's something that is long term. So they're not going to go away, and I think for the capital markets industry, it's not necessarily crypto where we see the big take-up or now or in the long term. It's more on the digital securities, so tokenization of equity or bonds, or therefore anything that it's actually linked to the cash leg of that, which could be CBDCs, stable coins, or anything on that realm, but not necessarily crypto for now.
Makes sense. Stephen, what are your views?
Yeah, agree with a lot of what Jonathan just said. I'll kind of lay it out like this. Going back a couple years, around 2018 at DTCC, we were looking at the concept of public blockchain and kind of on the back of the ICO boom. At the time, a lot of the large financial institutions were maybe not fully recognizing public blockchains, were opting to go private. I think that narrative changed a little bit. But we decided to lean into it, and we put together something we called Project Whitney and looked at what does it mean to tokenize a security from our perspective of market infrastructure provider. We learned a whole lot from doing that, and we engaged with kind of all walks of industry participants, custodians, broker-dealers, exchanges, and all of that informed efforts that we're doing right now under the name of DSM, Digital Securities Management, which is focused on private market securities, and that kind of is the way we're thinking about tokenization right now. Not specific to just private markets, but I'll say greenfield areas that don't have infrastructure coverage today, for a couple reasons. That's not to say that public markets infrastructure is perfect across the board, but fundamentally there is infrastructure there. There is ways to transact with it. There's this whole kind of wide range of assets, whether it's forms of real estate, tangible things like art, as well as pre-IPO equity, that are sort of ripe for some efficient infrastructure. And if we are kind of at this crossroads where we can try to go bolt it onto the existing infrastructure or leverage this new technology and some of the capabilities that can come with it, we're going to opt to go the new route there. So that's where we see a lot of the attention right now in capital markets, is focusing on those areas that are ripe for infrastructure. And then I'd say solutions that make them tokens more usable by large financial institutions. So that means not just the concept of self-custody in a wallet, but how do you bake them into our existing kind of tax and legal frameworks? There are pension funds out there and things like that have requirements to use a qualified custodian, and they already have, to Jonathan's point earlier, existing relationships there, and it's hard for them to break off and go to a new provider. So we look at it as how can the solutions that we build and the solutions that we're interested in kind of working with take all of the best parts of this new technology and kind of bridge over to pieces of the existing world right now to really realize the maximum benefit, I'd say.
Wow, that's really interesting. So it's really those infrastructure, underdeveloped in terms of infrastructure sectors where you don't have the better infrastructure already existing for transacting digitally that you see some of this taking hold.
Yeah, and I think kind of all markets will have a target on them at some point, but there are a lot of, to be honest, barriers in place. So kind of the area is, what are those new assets? And then we can start the conversation. And I know we talked about this just before we came up here, but just looking at the fact that there's about $1 trillion worth of assets on the kind of digital asset crypto side of the world, and $100 trillion worth of securities in the existing. And we have to start working on that path of how do those become digital, right? Because we can't just kind of only work on one path. There needs to be that bridge there between traditional and digital.
Yep, sounds right. Thank you. Victor, would be thrilled to hear your views, considering you're head of tokenization. I'm sure you have some very astute views. Please share them with us.
By default, I'm definitely bullish on tokenization. Enough so that the bank thought it was important to have someone just in charge of this in BNY Mellon to help ensure that we do it correctly. It is table stakes, I think, over time for us and for anyone who's involved in the capital markets. We're not taking sort of a greenfield approach to tokenization like DTCC, though I think that's an admirable thing to do. Focus on a new asset class, see if you can create that infrastructure. And I think given DTCC's role, that's a real sweet spot for them. we're actually looking at tokenizing all different types of assets internally. And really, tokenization for me is an enabler for interoperability. It's really about standardizing, right? And so if you, just as we were talking about, the 1 trillion and the 100 trillion, like that needs to converge and operate in the same environment. And if you can't do that, then clients of ours, we have broker dealers, investment managers, the largest, financial institutions in the world. They don't want to segregate and manage their assets in different pools. They want to have one client experience. They want to be able to utilize those assets efficiently, hopefully in very similar ways. And where it is dissimilar, they want a common, they want all of that to be solved for in the background, right? Just like Chainlink's going to be solving the interoperability issues. So for us, I see it as a way for us to connect BNY Mellon to other market infrastructure, to be able to mobilize assets across different settlement systems globally in a seamless manner. And why is that important? Well, banks, other asset owners, et cetera, they put a lot of capital, a lot of assets in accounts just to facilitate the movement of things in the world, right? And so it's sort of the grease against the wheel to be able to move things. You have to sort of what they call overfund. You have to put a treasury in to take a treasury out. Now they do that all over the place, and there's billions of capital allocated just to support mobility of assets, for example. But if you're able to do it atomically and you're able to do it in an interoperable way, you can swap assets, and you don't have to have that same capital buffer, they call it, to be able to facilitate movement. So what do we use tokenization for in the bank? Well, we're tokenizing treasuries internally, experimenting with that. We think that there's an opportunity for us to connect more broadly and mobilize those assets to places where they need them. Generally, volatility in the market creates uncertainty, which in the case of collateral, you need to move collateral to different locations, just like you've had a margin call for a crypto trade, for example, and it's gone the way you didn't want it to go. You have to place more collateral. Same things happen all in capital markets. The other thing around tokenization is that it really helps with 24/7. It's like the infrastructure that can always stay up, right? And the crypto markets have really pushed the financial markets to think about that. And we need to be able to support our clients in any time zone, in any location. And so by tokenizing an asset, there's things that you can do to that asset from a settlement and clearance perspective that helps create efficiency, like settling it instantaneously T0 instead of like Europe, which is T+2. You can accelerate transactions. And so we think that's also a big opportunity.
Great. Yeah, makes sense. I think the always-on dynamic is kind of here to stay at this point. Yep. And folks are going to be expecting that more and more. For the sake of time, I think we have time for maybe one last category of questions around DeFi. And it's really around how do you view DeFi, and do you foresee a regulated form of DeFi emerging? Jonathan, what are your thoughts?
So you need DeFi if you want to grasp the full benefits of tokenization and everything that we have spoken about, right? The same way you need Web3 to actually have that verifiable truth that you were mentioning in your introduction this morning, right? Which is, something that we also believe. Cryptography has been there forever, and Swift is at the center of that. Now, I wonder, and maybe we can see the reaction of the audience today, because you guys know better than we do, but is regulated DeFi really DeFi? That's something I wonder every day. You see the reaction already. Usually you get boos for opinions, but anyways, you see, so it's something that we have to, as part of being the incumbents in DeFi, infrastructures like Swift, banks, etc., we have to be humble to understand that DeFi is a space where, in some cases, we're not going to be welcome. So if we're not welcome, then is it DeFi too? But I do believe that if financial services want to go into DeFi mode, there needs to be some sort of regulated DeFi. Whether we call it DeFi, that's another question.
Makes sense. I just want to say, I welcome all of you to DeFi. All of you, and all of the massive amount of value that you just said, I welcome all that DeFi too. You're very welcome. We're very happy to have you here. you know, I hope you and DeFi can become like this.
Especially Steven's quadrillion, right?
Everybody. We are very happy to welcome you. You're very welcome. Let me just make that clear from the DeFi side of things.
So Chainlink is making those power plays right now, and that's why we're backing up our truck all the way to the bank, grabbing the bags, packing them and stacking them, leaving no bags left behind, because we believe the spending power of the dollar is going down in value. That's a fact. Blockchain tech, distributed ledger tech, and cryptocurrencies are going up in interest. That's the truth. And together, we're going camping on the beaches of the moon. I'll see you guys on the next video. I'll see you on bullrunners.com, where you will discover our top altcoin picks first. Before we make videos about them, you'll be able to join our private community, our private group, and you're going to get early bird access to our financial education platform. Just click the button on the page. Again, that's bullrunners.com. Link will be in the description below, and I will see you guys on the next video. As always, stay bullish.